Mark, we have a question, a couple of questions maybe we can get tied up here before we move on to the next presenter.
Well, we're out of presenters, so I think we can go ahead and open the floor for questions, Ken.
Okay, Carol Fine would like to know, she says, Manifest always seems so pessimistic on Costco revenue growth. She went to the Costco annual meeting Thursday, and it was great. I thought you might want to give a little bit of a background, Mark, on where the revenue growth numbers come from that Manifest uses.
Okay, or for any company, it comes from the same place that you guys do. We do a regression analysis on the historical data. The question, historical data plus a couple years of forecast, and that can be where the difference lies. We'll actually do the regression analysis, including, year-end 2010 numbers, year-end 2011 numbers, and sometimes that can be the difference. I'll take that as a question to post a question and an answer to on our forum, because it's worthy of showing you exactly where the number comes from, and we'll do that. But in general, that is the answer to the question. Very often, and in fact, I'll just urge everybody to really think about this. If the analyst estimates are weakening for a company for next year and the year beyond, I just argue somewhat passionately that you want to include that in your analysis, even if it hurts a little bit for a company that you get a little bit attached to. I'm attached to Costco too. It's one of the few stores I'll even actually enter, and they do a real nice job. So we'll take a look at where those differences might come from, but that's the bigger answer.
Mark, we're getting an interesting question from Miriam Beers. It's a question my stock club just kind of grappled with a couple of months ago. Oracle is close to a 52-week high. Does that matter for anything, and does that bother you?
Well, go ahead, either Cy or Ken. What do you think?
Well, from Cy's perspective, even though it wasn't, it was Ken's pick, I do own Oracle, as does my club. I don't particularly worry about 52-week ranges. What I'm looking at is that green number underneath the PAR on the chart. If it still has good potential going forward, then the fact that it has done well over the last 52 weeks isn't really a significant concern of mine.
Yeah, and I would second that. I mean, Oracle is probably our best performing selection in Solomon Select, and it's certainly one of the best performing selections I've made with real money in my lifetime. I certainly would be watching that and wouldn't be inclined to do much against it unless that number sunk down into low to mid single digits. And I'm talking about the projected annual return. Now, again, that decision for me would be made in the context of the total portfolio. And frankly, in this type of market, I would be paying some attention to the relative strength index. If it really shoots up dramatically and I see an opportunity to improve the overall portfolio and sell some, I may be inclined to do that. But again, that would be, if it had a huge surge in momentum, and by taking that action, I could actually improve the overall portfolio. But it would take some doing for that to happen. Yeah. In the case of Oracle.
And one thing, Mark, I'll just chime in real fast. And if you are totally beginning, you may want to stick your fingers in your ears at this moment, but any of you who aren't there, this does give a chance to bring up where I vary some from many investors. You've heard it said, let your winners run. When I see good potential, let's say that I had bought Oracle a year ago, it had doubled or so that it's now running a good chunk of my portfolio. And some people might say, should I be taking profits to cut it back? Historically, as long as I'm getting the future return, that being the PAR, that meets my objectives, I don't have a problem letting a company that is a high-quality company that has performed well. I think I've let some companies get as much as 25% of my portfolio. Now, that's not for everybody. But 20 to 25% does not concern me when I'm comfortable with the quality and going forward. And I've done that with Home Depot was the first one that I did that with, and paid some good dividends. But again, you've got to keep an eye on the quality, and you've got to keep an eye on that potential return. And similarly, don't fall in love with the company when that par drops to let's just take an extreme of, let's say, 3 or 4% on Oracle's case. Be willing to let it go, and perhaps before there. So anyway, that's just a minute mention of some place that I vary. Mark and I were having a discussion 6 to 9 months ago about our distinctive styles of investing, and maybe being more concentrated than many people is one aspect of my portfolio management over time.
As far as what Cy said, if that question was aimed at me about Oracle, I agree with Cy 99% that I'll hold that stock no matter where its price is, as long as the quality is high and the par is contributing to my portfolio. It's a wonderful stock. I have this vision of Tom O'Hara standing up in front of a conference years and years and years ago when I first began working with Better Investing, and pointing his finger at the audience and saying, "Don't be too quick to sell your winners." And that stuck with me for years and years and years. So that price up at its 52-week high, well, unfortunately, we're really lucky in my club right now to have 4 or 5 of the stocks up around 52-week highs, and we're not obsessing about that particular fact right now. Mark, we have another question from John Kimmel right now. He's wondering, are we doing any thought to the diversification of this portfolio?
All right, well, let me sidestep back to just one last comment on Oracle, and then I'll come back to John's question. This is more of a more engineering or practical matter. Somebody might ask me, Mark, at what point, within the context of the portfolio, overall portfolio management, would you start to be at least more watchful when it comes to Oracle? And the answers are kind of on your screen. If you go back to the last time when it, was in a lower projected return range, you can see that is somewhere in the 5 to 6% range. So at that point in time, with a projected annual return in the 5 to 6% range, I would be becoming more watchful of a company like Oracle. So that just kind of gives you the bigger picture on that sort of thing. The answer to the question, John, as far as what are we doing with the portfolio, I think all 4 of us have. And I'm just going back to the dashboard. I think all 4 of us have, one eye on sector diversification naturally. It's not something that over the years I've found I really had to force. And Ken just mentioned Tom O'Hara. I'll never forget Tom saying that he never made an investment decision on the basis of sector diversification. So we really probably won't pay that much attention to it. We know that if we really are doing our job as the months roll by, we will be pursuing the opportunities wherever they appear in front of us. On the side of having enough sales growth, the size diversification side of the question, that never leaves our frame of reference. You can see that as of yesterday it was at 10.7%. I think every single one of the 4 of us would have a fit if that dropped down to 8 or 7 or whatever. We would be definitely out there shopping for smaller companies to raise the overall average sales growth. Any comments to that, guys?
Concur.
Other than I agree, Mark. Okay. Mark, Chris Hodgkin wanted to know, he tried to put that DRI that I spoke about in relationship to the regional conference into his toolkit, and it didn't come up. Chris, DRI is one of those silly companies that it's named by 3 initials, but its ticker has nothing to do with those 3 initials. Its ticker is TBUS, TBUS. So if you're trying to put DRI Corporation into your toolkit, You want to use the ticker TBUS. Don't ask me why, that just works. Chris also has a question mark for you. He wants to know if you or any of the other presenters are holding stocks with manifest pars below my par by at least 2 to 4 points. And if so, why?
All right, repeat that for me again. He wants to know if we're holding any stocks that are below my par by a couple percent?
By 2 or more points. And if we are doing that, why are we doing that?
I don't think I am. If I have any one in any one of my portfolios, it would be Colgate-Palmolive, and that's still in the 7 to 8% projected return range.
I think it's actually about 10 or 11, Mark, because I own it too. But
oh yeah,
it's been on the low end. You're correct.
I don't know. Let's actually take a look at Solomon. That's an example of one. I mean, I will be. This is the monthly stock selections, and this is one that we may be hanging on to one down at the lower end. Okay, Aqua America. That's down at 5%. That's got a limited lifespan if that stays there. We'll be challenging that one in the Solomon Select tracking portfolio. I won't hang on to that one. And in fact, I kind of like this one because, not that I do I told you so's, but when we selected that for the newsletter back a little over a year ago, I think now, I got some cat calls. And people asked me if I really thought I knew what I was doing. Well, I'd just like to point out it's up 56%. And that it's actually treading towards what you could construe as a sell zone. So we'll probably be removing that and doing a celebratory dance, and that's an example of one that's a few percentage points. That's still only call it 3% below, 3 percentage points below my par.
Yeah, Mark, I'm going to answer the question by answering in classic manifest talk. I focus on the total return of my entire portfolio, and I don't focus on any particular return until that total return number drops below the point that it's 5 points above my par. When that number turns black, when it goes from green to black, and when I'm less than 5 points above my par, that's the place then where I start to worry about particular individual stocks in my portfolio, and that's the point where I will start to challenge stocks off the bottom, and where I will start to try to add stocks with par values near the top of the list. That means that I might challenge a stock that's even 2 points below my par. I might even challenge a stock 1 point or even at my par if my total portfolio isn't rising to the place that I want it to be. So I'm much more focused on the whole portfolio rather than individual stocks.
And I would just second that. That's generally the condition. I mean, I don't start looking at them individually until they get pretty low.
Yeah. Just adding to there, I'm sorry, Mark. Did Colgate have a run-up this week? Because I've been working on the portfolio, and I see that it is down a little. You were correct where it is. But anyhow, I also look at portfolio total and don't get overly concerned about individual stocks until that changes. Although I do have kind of my second glance, I do tend to look at my par versus is anything below my par, because some of the smaller or a little bit more volatile companies, I might start watching at that point, though I don't generally sell. Now, in answer directly to Chris's question, I own no companies currently below my par.
Mark, we have a question about the groundhog competition from Herb Lemkel. Herb wants to know, do you have to submit a new entry, or can you just let last year's portfolio ride?
You can definitely let the existing positions ride if that's what you want to do. Just send me a note to that effect. And I must be reading mine because I switched over to the scorecard for this is current data, and I believe it includes all dividends and this is semi-official. I did this kind of celebrate. I see that Ann wasn't able to be with us this morning, but I know Susan is. There may be a few other people on the call, and just a number of people. And then, as I pointed out at the beginning of the session, Herb and Ken and their groups are literally locked head-to-head, tied for first place in the group entry category. And don't get too cocky there, gentlemen, because Ellen Hall and her women from Maryland are only $20 behind you right now. And you know, one of the things we've been talking about and this will be the subject of the newsletter here in a couple of days. There's a lot of ladies up at the top of that list, and this year is definitely one for the girls. I'm a Martina McBride fan, for those of you that probably already know that. Any other questions? We're at an hour and 20. We generally try to keep these under an hour and 30, but we're willing to address any questions or comments that anybody may have out there.
Well, Mark, Susan is asking if Cy is going to present an actual stock today.
No, they're afraid that I'll blow them off the map, so they wouldn't let me today, Susan.
Well, actually, we left that spot open for Hugh, and we're just crushed that Hugh wasn't able to join us. But I don't know, Cy, do you want to? If you had to pick one today, where would you go? Did you have any thoughts along those lines?
Well, I'm going to need to be leaving here in just a moment for another appointment. But where I was looking, and probably would may go next month, was with an insurance company, Power Group, TWGP. I thought maybe we could take a jump into financials, and it looked rather attractive on some manifest gains.
I think Cy is breaking up pretty bad.
Okay. Can you hear me now?
Okay. Yeah.
Yeah. My phone was ringing too, and unfortunately, because I had muted myself, and then you asked me the question, and I was. But anyhow, I was saying where I'm looking right now, and if you had to have me present a stock, it would probably be an insurance company, small to mid-size, called Tower Group, TWGP.
Okay, well, we'll just put that on the unofficial roster. That's one that has been kicked around in the community a little bit over the last year or so. Definitely worthy of taking a closer look.
Yeah.
Anybody else have any thoughts or comments? What is the hottest stock tip for Groundhog 2011 that you can think of? Everybody doesn't want to share because they want to win.
That's right. Keep those hot tips secret.
Now's the time to mention all your dogs, guys.
I don't remember the number of the heavy hogs, but one of the questions that we got recently on our Facebook page was how much have we suffered because of Capella or Strayer education, and the answer is a lot. There's a number of the Groundhog contestants have been really significantly impacted by those educational services stocks, and not in a good way.
Mark, I'm going to repeat the ticker of size stock. There's a couple of folks that missed that ticker. It was Tower Group TWGP. T like in Tom, WGP.
And there you can see why it has Mr. Lynch's attention.
And we have Herb on the question box touting hogs and oink. He likes them both.
Figures. Although I have not studied oink yet, I have studied hogs. And hogs has been prominently featured both here and in a couple other venues.
I actually bought a little hogs this week thanks to Ken's presentations, and am up a little bit. So thanks, Ken.
Well, just wait.
Patience, right?
Patience. Well, that's a perfect example of one that has not set anything on fire yet, but very good long-term prospects. All right, any other questions? Or shall we leave everybody to the rest of their weekend and Saturday afternoon?
I will tell you that those of us in the motor capital of the world, which is what we still call ourselves here in Michigan, are beginning to seriously look at auto supplier stocks again. My club is in the process right now of pulling out a couple of auto suppliers that we like and taking a real serious look at them. And top of our list right now is a stock called Gentex. So if you're interested in where Michigan people are investing, that's one industry or sector, mini sector, that we haven't looked at in years and we're now serious about.
Interesting. Well, I guess I'll close down just by reminding everybody that we will be doing this again in a month, hopefully with Mr. McManus able to join us. But there are a couple other events that you might want to put on your calendars. They're both Tuesdays. Day after Valentine's Day, we're going to do dashboard diagnostics again. There's a pretty good chance we're going to be featuring a pretty famous club from the heart of Illinois in that one. You guys can take a guess who that might be. And could be a fascinating look to see how the ladies are doing. And then the Challenge Club will be on Tuesday evening, a week later, February 22nd. So again, you can get more information on those either in the Manifest Forum under events or on the Facebook page that you see at the bottom. And again, our reminder, you do not have to be a Facebook user to use that Facebook page. You just can't use all the features, but you can still see, be kept abreast of some of the stuff that we're doing, including sessions like this one. And with that, I'll just say thank you to my colleagues, Ken and Cy, and thank you to our producer in the back room, Dan Hornick. He's quiet, but he continues to churn out excellent work, sharing our presentations on the Facebook page and in the Manifest Forum. And we appreciate your support, Dan. So good luck, everybody. Good groundhog shopping. I look forward to seeing what's in the heavy hogs list for 2011. Everybody have a great weekend, and we'll just shout out an early happy Groundhog's Day to everybody. Take care, everybody.
Thanks, Mark. Bye, folks.